Okay, good morning, everyone, and welcome back to our weekly market outlook session where we look to analyze the markets and try to spot tradable opportunities for the week. Okay, so as usual, we'll begin by looking at the forex factory and look at the economic calendar for the week, what to expect, basically red news, times or sessions where we want to probably look to be more cautious about trading. So what do we expect this week? So today is Monday, 20th of March. For the week, you could see that there are some red news on Tuesday, there are some red news on Wednesdays, there's some red news on Thursdays, and some more on Friday. So it's a week packed with a lot of red news. Now, all of this will just end up in liquidity or injecting liquidity into the market. We just want to be cautious about those times so we don't get on the wrong side of liquidity. So on Monday, today is actually quite calm. But then from Tuesday, we have Canadian CPI reports, which would be out by 1:30 p.m. There's also the CPI reports from the GBP, that's from the UK, by 8 a.m. tomorrow. And then there's also the FOMC rate statement. So this is going to be high impact news by 7 p.m. on Wednesday. And then on Thursday, we're going to have the CHF monetary policy assessment, as well as the GBP MPF bank official rates votes. And then by 1:30 p.m. that same Thursday, the unemployment claim would be released. And then on Friday, by 9:15 a.m., we'll be looking at the French PMI service reports, which will be out as well as other manufacturing PMIs from Europe. And then we'll wrap it up by looking at the flash manufacturing PMI from the US. So quite a lot of high impact news. I don't really care about the news. I just pay attention to the times. So let's say, for example, I'm looking to trade something related to the CAD, and it's around this period. I probably want to wait until after the news or manage my positions as price moves my way. Okay, so we have that in the back of our mind. Let's go over to our chart, which is actually where we want to be, and we'll begin by looking at the DXY. So the DXY is the dollar index. It measures the strength of the dollar against the major baskets. And if dollar index is bullish, you could expect bullish dollar. If dollar index is bearish, you could expect dollar to be weak against multiple pairs. So you could see that overall, the dollar index has been quite weak. I mentioned this one, I think, about 3 weeks ago, and also on the client-only channel, when price was heading back up to this area. You could see how price came up to this area and began to break down. Now, basically, it doesn't really look good for the dollar because you can see that it's weak overall. Long term, you could see it's bearish. Then even on the short term, you could see how we came up into this area of basically this area of interest, and you can see how price is breaking down bearish again. So we are breaking down even within this structure. What this basically is telling us is that price is still most likely going to want to be doing something like this. The next target liquidity would be down here. Now, I don't really trade the dollar index, but the insights, understanding how it is setting up, might give us clue as to how we trade things like gold, euro, USD, pound, USD, USDJPY, and all the dollar related pairs. So let's jump straight to, before we come to gold, let's look at euro USD. I gave out a signal was sent out to the Telegram channel on Friday. And this is what the signal was. So I got involved in a trade, I think on Thursday, while price was down here. So we actually got involved in multiple trades. So price, you could see this. Now you see it better on the 4-hour chart. Okay, before we go down to the 4-hour chart, let's look at the daily chart and why we are buying. You could see that the market is bullish, making higher highs and higher lows, higher highs and higher lows as price makes its way up. Now, since from going from this low to this high, price formed a range. So this was the range. And then price began to pull back. So we identified this area as potential area from which price would begin to bounce back up. Now my targets, just like we did on gold. So this is very similar to gold, right? Very similar to how gold was a few weeks ago. Let me go over to Euro USD. Sorry, gold USD. You can see it's quite similar. We had this push from this low down here. Let me go from this low down here to this high. So that was the move. And then we saw price begin to pull back down. And then I highlighted this area after we had this break of structure to the upside. And then we started looking for buys. We got involved in a buy here, multiple buys, got involved in some other buys along the way. But eventually, you can see how price has come to clear this high, right? Similarly, go back to Euro USD. we are in the same set of type of scenario. Now, there's no guarantee the price will do the exact same thing. There's no guarantee the price will do the exact same thing. And we're not in the business of doing guarantees. Basically, we look to trade clean price action. So what price is doing based on our own system of trading. As far as I'm concerned, this is my target liquidity. I'm expecting that we'll probably see price come back up to take out this high. As long as it respects this low, right? So as long as this low stay intact, there's a good chance price is coming to basically take out this high here. So this high is the target as long as this low remains intact. Now, let me go back, EURUSD. Now, basically, with that said, what that means is now, the way you want to trade is this. You want to, I know a lot of people say you want to react to price. No, you don't want to react to price. You want to have a bias. So you want to look at the market, have an idea as to what you want to trade and why, and then wait for the markets to react to your bias. If you find that reaction, then you pull the trigger and execute your trade. I got involved in a trade here. I made mention of that. If you can go back and check so if you're watching this on the YouTube, you can just check some of the previous weekly market outlook classes. You'd see we had our analysis on EURUSD since price came down into here, right? So as a matter of fact, I got involved in a buy trade targeting these highs. And even though price ended up failing, I made at least 1:10 on this move up here. Now, this is the way you want to approach the market, such that even when you're wrong, you want to end up making money. And it's all down to trade management, trade psychology, and how you basically define your edge or build your edge in the market. Now, so if you go over to the 4-hour chart here, you'll see the structure a little bit more clear. So notice this, right? So this was so basically this was the area we had the first trade. So let me just use my part 2. Notice how price has been was bearish coming into this region, making lower lows and lower highs, right? So price kept making lower lows and lower highs until we tapped into this area and see how price began to make a high. Basically started to shift structure, right? Now, from when price pulled back up here, now I won't go into exact why I got into the trade here, but there was a structural definition of shift within the smaller time frame for which I got involved in a buy trade. I made mention of that to you guys on the Telegram channel, those of you who have funded your account with ANZO, and in the class, the cutting edge class that we had. So I got involved in a buy, right, from around this area, targeting this high. You could see that I was targeting this high. Now, even though price did not end up going straight up, I ended up making about 1:10 on this trade. So let me, if I break down further here, you'd see, so I got involved in a trade here. You can see my risk very low. And my first target, basically my first liquidity target was this highs back here. And price came in here. This is where I took my first partial. I got involved in another trade and I took another partial here. So I made 1:8 RR on this, made another 1:8 RR on this. Now, eventually price came down. At this point, my stop loss was at break even. Price came down and cleared all that. Now, note something. There's something I want you to understand here is note that even though the market did not begin to run up from here, and then price fell off the cliff from here, it does not change the structure of the overall idea, right? So if you go back up to the daily and the 4-hour chart, you still see that price is still within the framework of this trade from this low to this high. It has still not broken below this low, which is why I was still looking for opportunities to get involved, got involved in another buy trade, which is still active, and then got involved in another buy trade. This was the one that I sent out to the Telegram channel. Those of you on the Telegram channel, you note that now I don't really like to send signals. I'm not a signal type of person, which is why you won't see lots of signal there. I'd rather have classes where we do analysis. Because signal just makes you lazy and then you just become very dependent on the person providing signal. But however, it looked like a good trade at the time. I was live trading at that particular point and I gave out an entry or a buy, which was at 1.0617. So within 1.0617 to 1.0609, stop loss was supposed to be at 1.0603. You could see it here. So let me go down to the 15-minute chart. Maybe it becomes better. You could see, just look to my left here. You see this is stop loss 1.0603. Let me see if I can highlight this. You could see this is 1.0603. My exact entry was here. I gave within here to anywhere within this area. It was a good entry. And you can see I took partial here, obviously, and price has moved and is still moving. So this is one good trade setup. If this area holds, well, I'm still interested in taking this in all the way up to what they call a previous high. So as you can see, let me push up. You could see that I'm still targeting the overall high. So I'm bullish. I'm still bullish on EURUSD. On gold, I'm no longer trading. I'm no longer looking for buys, and I'm also not looking for sells on gold. Because the market is bullish, there's a good chance price will continue to just drift up. If price begins to break down, that's fine. I'll stay away and wait for an entry to continue buying, because I'm actually interested in buying gold just as I'm interested in buying EURUSD. So on this, if you are not positioned, you can see I have already three trade entries on this particular one. So I have my first entry here, a second trade here, and a third trade here as well. Now, some of you should already be in this trade. Some of you might have taken profits, which is very good, or very good as well. You don't have to trade the way someone else is trading. You don't have to try and trade the way I trade or the way another person trades. Basically, the goal is to define your edge and how you want to trade the markets, and then look to trade the market in that way. Now, what are we looking to do for the week? Well, looking at this for today and the week ahead, you can see how we have price breaking these highs here, basically, which is good for buyers. Now, if you're already positioned in a buy, move your stop loss to at least break even or slightly better, and just keep, you probably want to have taken some partial. If you have not, you might do so now. And then if you're looking to get involved in this trade, here's what I'll suggest. Wait for a pullback. So let's say, let me go to the 1 hour chart here. So let's look at the 1 hour chart. So if price breaks up, all right, so if the market continues to move as it has broken, look for pullbacks and look to buy those pullbacks. Keep your stop loss just within that structure. So let's say, for instance, price ends up coming up to this area like so. We're getting to this point, right? So let's say price ends up getting to this point before beginning to come back. All you can do, or something you can do, is you can just simply use a Fibonacci, go from low to that high, and look to buy from the 61.8 or wherever you're comfortable with. But remember, you want to buy with confirmation, so you could use price action as confirmation and other things. Now, here's a good example of that. Remember, we got involved on this trade last week within here, right? Now, see what price did. It went from this low, right, and went up to this high. You can see it has made a higher low and a higher high. Now, if you were using that same sample, you would have done this. Take your Fibonacci, draw from low to high, right? And then watch for confirmation within any of these Fib areas. You could see what happened here. If you take your, you see what happened here as price pull back down, got down to just below 61.8, around 78.6 Fib level. That's if you're a Fib trader, right? This is not necessarily the way I get into positions, so I'm just giving you an example. But you could see the confirmation here. You see this rejection candlestick. You can see we have rejection candlestick, and that could be your reason to begin buying. So basically, the idea is we're looking for buys. We're looking for buy opportunity on EURUSD, because I like this setup. Now on gold, let's go over to gold. I'm not looking to buy or do anything on this one per se. I have, you could see all my entries, right? You could see all my entries on this one, still going up to this highs. I had like 6 trades, not at the same areas, with different confirmations. I had some fails here. There were some losses, even though I was buying based on the way I trade. Like I probably told some of you, my win ratio is like 60-40. So I lose about 60% of the trades I take, and only win about 40%. Now, while that might not look so nice, because of the way I trade, you can see my risk to reward is actually crazy. I usually tend to take my first partial at about 1:7, 1:8. So it more than makes up for when I'm wrong. Now, one thing you don't want to do, one of the things I see that kills traders is the fact that they refuse to be wrong, right? So they get into a position because of certain reasons or certain bias, and then they refuse to take a loss. And then they keep maybe trading without stop loss or adjusting the stop loss down, hoping that the market will reverse. Now, sometimes we get those reversals. When those reversals occur, it's not a good thing because then it forms bad habits in your brain. And then you'll keep doing that until you blow your account. So you want to analyze the market. Don't show up to trade, show up to analyze. When you analyze the market, you can now, if you see an entry that meets your criteria or a trade that meets your criteria, you can pull the trigger and take the trade. But you don't take a trade without defining where exactly you exit in case you're wrong. And you should be okay with the risk. If you're high risk, good for you. But just know that when you're wrong, you might lose a huge portion of your account. Personally, I tend to risk about 1% of my account on each trade. Right? Now, that might not be practical for everybody because everybody's account size is different, but you get the whole idea. So the fact that you're looking at risk would help you understand the actual lot size you're going to use so that it stays within your risk parameters. That's one thing to keep in mind. Now, so for gold, like I made mention, this trade was beautiful, best trade for me for the year so far. But then the question is, what am I looking for? Well, we just saw that the dollar is most likely going to be, based on the DXY, still. Okay, sorry about that. I don't know how long I've been talking without you guys hearing me. Okay, so like I was saying, like we saw on the, like I mentioned earlier, like we saw on the DXY, the dollar appears to be quite weak. The technical suggests it could even drop even further. So, well, even though price has gotten to the area, so if you look at the daily chart here, price has made a new higher high and could begin to retrace to make a new lower higher low. I don't, like some people will try to do, they'll try to counter trend trade this thing, maybe look for the sell opportunity. I'm not going to do any of such thing. I'm just going to wait. If the market begins to drop, no problem. I will look for another opportunity in some other pairs until it begins to look, until the market begins to look favorable, at least from the way I tend to look at it. So for gold, I'm not trying to buy this thing. I'm also not trying to sell it. So here's what I was trying to talk about. You could see we made our higher low, and now we've come to make a higher high. So there's a good chance price could come back down, right? Make a new higher low before going on to make a higher high. But there's also the possibility that price doesn't come back. So this is where people get trapped. They might begin to try to sell this thing. So, okay, if it's going to come back, I'll try and sell it so that then when it gets down, I'll now buy it. But then the markets will do things like this, just keeps on going, right? So this is why I'm not going to, if anything, I would even be looking for opportunities to keep buying. But even if I get into buys, it will be not so aggressive. I'll be looking to, basically, I'm looking to do nothing here except I find good buying opportunity. I'm only interested in buying gold, but I don't necessarily want to buy from this area. If price begins to drop, I might look for opportunity to buy, or it drops further, I might look for opportunity to buy this thing and take it up. So gold, it's not necessarily the best for me, at least for the week. Just enjoy the profit I've made. I don't want to give it back. Now, so that's GBP. Let's go over to GBPUSD, as that is gold. So let's go to see GBPUSD. So on GBPUSD, this one also, we were looking for opportunities to buy. At least I made mention of this. We're looking for opportunities to buy, expecting price to drop down like so, but price did not drop down. So this is the reason why I don't like to force trade. Some people might try to, since he's expecting price to drop down, let us sell it. And then you start selling and price begins to go up, right? So if price doesn't give me an entry that in an area I'm interested in, I probably will not trade it. Now, I didn't really look much in GBPUSD last week because I prefer the setup on EURUSD and on gold. But for the week, like I mentioned, I still feel this is the overall target. Not for the week though, but long term, this appears to be the overall target I think price really wants to go after. Okay, so for the week, look for things like this. So if we go down to the 4-hour chart here, You could begin to look for opportunities. You could see how we appear to be breaking structure. So if price push up a little bit and then begins to come back down, you could look for opportunities to buy this, probably this other block to take it up. Okay. So GBPUSD, right now I'm doing nothing. I'll be looking for opportunities to buy around 1.2079 to around 1.2025. So within 1.2025 to 1.2079, I'll see if price drops into this area, that region, and then I'll look to get involved in a buy. Otherwise, and there's also the chance price just even drops further. So I'll remember, like I always tend to tell you, you want to trade with confirmation. Now, remember, this is just the weekly market outlook. I don't go into so many analysis of so many pairs. I'll do that tomorrow and Wednesday's class, on the cutting edge class. But let's also look at one pair I discussed. I think I touched on last for the past few weeks. I think that was AUD, CHF or AUD card. AUD card, I actually I think I sent out a trade to sell from here, targeting this low. I think we only ended up hitting the first CP. Price has now continued to move up. So I'm not trying to do anything on this one just yet. I'll allow the market decide what it wants to do, then I'll look to trade it. I think that was AUD CHF. Is it AUD CHF? No. Am I missing this up? AUDJPY. Okay, no, this wasn't AUDJPY, but this is also another setup that you want to pay attention to. So AUDJPY, you could see that now overall, when you zoom out, you see that this market is in an uptrend, right? So the market is bullish, an uptrend. Also, this is the daily chart, by the way, you'd also notice that you could see how this area is holding up as potential, what you call support. You could see this. Now, this doesn't mean that it will definitely hold up. Okay, so sorry about that. Now, what was I saying? Yeah, this level here, you could see how this area has held up. Now, you also want to pay attention that, now this on the higher time frame, this market is quite bullish, right? So market is quite bullish on the higher time frame. And so there's a good chance that this could begin to break upward. However, there's also the chance that this is where the bullish run might begin to basically come to an end, right? So we could begin to see the end of this bullishness. Let me just do this. Yeah. Okay, so we could begin to see the end of this bullishness if price actually fails to hold this level. So if buyers fail to hold this level, we could see the breakdown. But for now, I'm going to continue to anticipate that bulls would hold on to this area. So you might look to get involved in buy trades within this region. Obviously, you want to. So let's see. Let me go down to the 1 hour chart here. Let's see what's going on, and let's see something you might look to do. Okay. Okay. Still looking bearish. So this would be something to keep in mind. Let's see. This trend line would be quite interesting. Like so, right? Just keep this in mind. If the market finds a way to break above this trend line, like if we have this break above this trend line, the retest of it could serve as good buying opportunity to keep on going. The reason why, some of you might be aggressive and decide, oh, let me buy here, put my stop loss down here, and, price might begin to move. And, well, very good for you. The only challenge with that is confirmation. There's no real confirmation that price is really ready to start breaking upward, right? So you might say, oh, look at this bearish or bullish pin bar or something. Yeah, you could trade that. But in terms of structural confirmation, market is still basically quite bearish. So, but if we see price break above this trend line, if it begins to retest, that could offer excellent buying opportunity. Now, if you look to buy, you're not going to now be looking to place your stop loss down here. You want to place your stop loss based on the structure it forms around there. And your targets, well, your targets, if that holds, and this is, these are the kind of trades where the market really is ready to hold this area, price could very well end up running up to this point, right? So it's quite, it could be a massive trade if price holds this area and begins to break up. Alternatively, if price breaks down, we could have a retest and then we could have this drop, right? Now, for those of you who trade head and shoulders, this could, somebody might consider this a head and shoulder pattern where, and if that's the case, it could be a reversal pattern where you have the, the left shoulder, right, the head, and then the right shoulder. And then if we break down, we can expect price to move this much, right? The same distance from the head to the neckline. Okay, so there are two scenarios that could play out here, and we are at a point of what I call it, of influx, a point of decision where decision had to be made. Let me even draw this out properly. So so we're at the point, so this could be, so there are two scenarios. Now, you want to, this is why confirmation is quite important. Right? So if price breaks, so when I mean break, I mean, you can see that price has not closed below this level. If price closes, we have a daily candle close below this level. That could expose this low. So basically, we just take the measurement like so. This is from 1,135 pips, and we go 1,100 and I just call it that. So we might be looking at something like this, where this could be price targets, right? We could see price drop down all the way here. Now it's depending. This is unlikely. This is peradventure that price breaks this neckline and begins to go down. Otherwise, I always like to read in the direction of the trend. And what's the trend saying? The market is bullish, and there's a good chance price will continue to break bullish. So if I find bullish confirmation, like you see, if we have this trend line break on that 1 hour chart, that could be confirmation enough. Remember, even if you get a trade to sell or a trade to buy, you want to look to manage your trades as the markets move, so that even when you're wrong, you could still end up making money. Okay. So this, anyway, I'll be updating the follow-up on this particular trade. I'll try to update the follow-up on this particular trade as it happens, especially to those of you on the Telegram channel who have funded your account. If you've not, reach out to me. So you can, if you've not funded your account and you're not in the group, and you don't join the live classes that we have from the group, you should do so. Fund your account, reach out to your account manager, reach out to me, and we'll see how we can fix you up. Okay, so that is basically I think that's our class for today. I don't, like you would know, I don't tend to talk about so many instruments, but we looked at quite a number of good setups on EURUSD, AUD cards, even AUD yen, GBPUSD, gold. So good setups to watch for the week, at least. Trade ideas as to potential market direction, while we are factoring in the fact that we want to pay attention to those news and don't be caught on the wrong side of liquidity. Okay, so that's about it for me today. I hope you enjoyed the class. Remember, the recording of this will be made available on the YouTube channel. If you're watching from the YouTube channel, please remember to like and subscribe to the channel as well. So as usual, like I always tend to say, trading it's basically all about preparation. So you want to prepare, you want to do your analysis, and then it's all about risk management. You want to be a guru at managing risk and trading with your head, basically, and not necessarily with the drive to make money. Trade your pattern or trade your system. Don't trade for profits. The profit will come if you follow your rules. But if you just look to jump on any trade and you're so anxious about not being on a winning trade, you end up being on the wrong side of the market more often than not. So as usual, remember to always trade with proper risk management. This is not financial advice by any means. This is not financial advice. All of this are speculative and are my perspective on the market. Trading carries a high level of risk, so anything you do is your responsibility, basically. Okay. So thank you everyone for joining in, and I'll see you in the next class.